Earnings Armageddon. Caterpillar out with a major miss as the global slowdown takes its latest victim. The stock down 10%. And the other implosion, Nvidia out with a major warning ahead of its report. The stock getting crushed down 15%. The two earnings disasters wiping more than $20 billion in market cap off the table, weighing on the broader markets as we roll into the thick of earnings season. Will we see more pain, and who might be the next victims to watch, Guy?
Yes, you're going to see more pain.
And
absolutely going to see more pain. But the one that I'm watching is McDonald's, and McDonald's reports before the bell on Wednesday. Now, as you were saying, a lot of people say Apple, Triple M is obviously in that, but I'm going to look at McDonald's. Why? Because last quarter was a great quarter. U.S. comps were in line. Where they really beat were international comps. I think about 4.2%. Stu was looking for about 2.6%. Question is this quarter, can they continue that growth overseas? You're obviously seeing a slowdown in Europe. You see what's going on in China. So for me, I think McDonald's is a huge tell this coming Wednesday before the bell.
And you think McDonald's will be a tell, unlike a Caterpillar or Nvidia? Because I feel like McDonald's falls in the category of a Starbucks and a Nike, right, which have seen good reports in the face of a slowing Chinese economy.
Yeah, and I would put Starbucks and McDonald's in a place where, you know, defense is how people have played this market for the last 3 to 6 months. And actually, defense comes at a price. And guys certainly could be right if these guys guide headwinds on labor costs, which are right there for them, in terms of global expansion, which China is also a big part of their story. It's not as much as China. I think McDonald's also, if you look at the charts, you know, you can make an argument there's a double top at 190. I think the issues with companies like these are they have been the ones investors have felt the most confident about for the last 6 to 9 months. I think if we look at what happened today, something like Caterpillar is just another indictment on global cyclicality. I actually think that these numbers from Caterpillar were not that bad. And when they guide somewhere around 12 and a quarter for next year, this is a stock that's trading at about 11 times earnings, maybe inside of that. And if you put a 14 multiple on this, which many people on the street have had no problem doing in the past, in less growth of an environment, you've got a $170 stock. I think you have to be very careful right now with some of these stocks that are getting thrown out the window.
It was the biggest quarterly miss. I agree with you. I don't think the numbers were that bad. When you read through it and you see that headline of it was the biggest quarterly miss since 2008, it gets everyone panicky. But when you read through the numbers, I don't think they were terrible on CAT, but it makes it impossible to want to buy that space, that sector. It's now the 10th company or so that's warned.
I mean, the question is, does the valuation reflect what is going to be roughly flat growth for China for the rest of the year?
Yeah, maybe.
I mean,
I agree with Tim. I think it wasn't that bad for a company that doesn't have a super high multiple to miss by, what was it, 50 cents or so, and yet it was down that much. I thought that was a bit of an overreaction. On the flip side, Nvidia, I thought that was really bad. That was disconcerting to me. I mean, another growth engine of theirs. We knew,
but they also had an oversupply issue originally. When we look backwards in Nvidia, they were trying to burn off whatever oversupply they had with that Bitcoin bubble. Right. So that you saw play through. But the gaming, the data centers, and everything else is a little concerning.
I mean, the data centers is extremely concerning, right?
Yes, and it's still even down this much as it was today. I wouldn't be surprised if there's more downside to come. It is not cheap.
I mean, I think one of the big issues here with Nvidia is that the CEO gave guidance on this quarter, which is pre-announced, just in the middle of November.
Right.
So the lack of visibility that happened somehow unfolded in the past month and a half.
Sounds kind of like Apple. What Apple did.
Exactly.
Right.
And so it'll be interesting to hear on the conference call when they do actually report the results in February, what the degree of deterioration they saw was in the quarter.
What happened? I mean, Tim mentioned within 60 days the story changed at Apple in a significant way, and within 35 or 40 days, the same thing in Nvidia. I think they have. Quite frankly, I would think they would have more clarity, but I guess I'm mistaken. And they seem to paint a much different picture back in November than they are now. To Karen's point, though, stock is still not cheap. And now you have to sort of question going forward. They've been given the benefit of the doubt now for the last 2 years. Do you still give them the benefit of the doubt going forward?
Or how much did they know about, and they were expecting it either? I'm not saying that they were doing anything in a nefarious way, but what happens if they did know about it and were just waiting for it to turn and sort of sat on it, and it's not turning, it's actually turning down, and we're looking at the worst growth numbers out of China for just under 30 years. So this is real.
Yeah, the problem with Nvidia is I don't think people know how to value this company. This is a company that at times was in the most go-go of spots, whatever we want to call them, Momo, whether it was Bitcoin, whether it was gaming, places where they thought there was unbridled growth at whatever price you wanted to pay. And now at 22 times trailing, it's half of where it was. But I still think at these levels, if RTX and gaming is still a problem for them, I don't think we know.
So I think we asked the question at the beginning because we want to know if there is an extrapolation to be made with Nvidia and or CAT on their sectors. I mean, for Nvidia, is the extrapolation to be made to re-rate the semiconductor sector, which is basically up until the open today, up about 20% from December 24th lows.
It's interesting, though. You see the companies that are doing well in the tech, the semis that are doing well are companies like Lam Research, like the Xilinx, that are really focused on 5G. Now, Nvidia, focused on other things, along with Intel, makes you wonder, has the baton been passed? I still think those high flyers like Xilinx and Lam Research go higher from here. But think to Karen's point, Nvidia, I think, still has some room to the downside.
I think that December 24 low, it shouldn't have been there. Never should have been there. But, I mean, we had a very sharp bounce back. I still think there's some downside here. The stock is not, it's part go-go, right? So there's the there's the fundamentals and the go-go-ness of it. How much sort of, short-term momentum money was in it? Is it all gone now? I doubt it. I bet there's.
And how much of that was positioning on both sides, where people had just had to get rid of it by year end, and then they had to buy it back because it was the most damaged. So a lot of these large cap tech names or a lot of these niche little spaces really directed the overall market on a bounce back, and they're probably running out of gas.
I just think that semis were the first ones to lead us lower in terms of growth headwinds all the way back in June of last year. They got overdone. I think the good news, and I think we have Carter on a little bit. I mean, the charts are very important for some of these extreme momentum names, and I would make an argument that the semis bottomed and broke that downtrend at least last week.
And there's a lot of charts we can go through.
Yeah, and there's many charts I believe Carter's going to have, fortunately. But again, I think that the semis right now have priced in an enormous amount of global cyclicality.
So ditto for the industrials. Is there an extrapolation to be made for Caterpillar?
Well, I mean, if we look at URI, that's an industrial entirely North America, not entirely, 90+% North America focused. That was a different story. I don't think CAT North America, well, actually, I'm not sure. I think those are potentially a tale of two cities, different end markets in some ways too.
I think when you do look at the industrials, they've had an incredible bounce back, and specifically when you look at Boeing got it on the chin today as a peripheral from CAT, but I think there's still more. When you look at the bounces, that these charts have more downside that is possible depending on what guidance they're going to give as well.
I'd just say this about earnings. The S&P overall for this quarter so far is you've had earnings come in about 3%. Industrials have been the steadiest in terms of the EPS if you look at where they were 6 months ago. And I would just say that industrials priced in where they are now a lot earlier, and I think there's still a lot of pain for the economy we have right now. That's an economy where the U.S. is growing 2.5%, and we know that the rest of the world is slowed down substantially. Europe is probably flat to 1%, and we don't know where China is. But industrials have that in them now. If that changes, very different story.
You agree?
I think Boeing on Wednesday, again, before the bell, along with McDonald's, is going to be fascinating. I happen to think Boeing's going to be fine. I think it's a much different story. It's a cash flow story. Valuation is not ridiculous given their EPS growth rate. So I think Boeing's going to be fine. But I think Boeing is Boeing specific. So I wouldn't say if Boeing beats, I wouldn't take that as a tell for the rest of the space.